CNBC-TV18, embarking on a quarter century of excellence.
Stocks clock some more gains after the Christmas weekend in an event-light week. Energy and utilities gain, while IT is the prominent drags. The mid-caps outperform today. An expected $1.5 billion contract for Infosys slips through after the customer terminates the MOU. This compounds analyst concerns following the slew of management exits. The stock slips in trade. And news reports say that Reliance Industries has inked a non-binding pact to merge with Disney's India operations in a deal that could conclude by February of 2024. Reliance has not yet responded to CNBC-TV18's query, even as the stocks of TV18 and Network 18 gain. Ola Electric files for a 5,500 crore rupee IPO in what will be the first public offer by an electric vehicle maker in India. Promoter Bhavish Agarwal will sell some shares, while the fresh issue will fund capex, debt reduction and R&D. Good afternoon and welcome to Business Lunch. I'm Pavitra Parekh. Those are the top headlines. It is the final trading week of the year, so things are a little bit quiet. The volumes are a lot lower, but for the market, what's encouraging is that after that very slow start, we have managed to gain almost a full 100 points. So things are looking quite all right. The mid caps are in solid form. So you're seeing an over 300 point kind of gain for the mid cap index. That's where a bulk of the action is, and that is what is leading to this very positive advance decline that we have on our hands as well. So you right now have around 1,900 stocks which are advancing for just around 1,100 which are in the red. What's doing well? It is once again the PSU companies. So a lot of the usual ONGC, NTPC type of names once again clocking gains. In fact, speaking of ONGC, it is this entire oil pack which is holding on to gains very well. So ONGC is up, Oil India, HPCL is seeing a big move higher as well. Today you also have a big support coming through from the heavyweights on the index. So names like Reliance Industries, HDFC Bank really coming through and supporting us today. What's not doing well is of course the IT names. So Infosys I mentioned earlier, but you have the rest of the IT pack also seeing a bit of red on the back of that news flow. Wipro, but I want to point out, is completely on the other end. It is gone and put on around 2% in trade today. So close to a 52-week high that we're seeing on Wipro as well. So do keep that in mind. Also, what's posing a little bit of a drag today is the Bajaj twins. So Bajaj Finance, Bajaj Finserv, a little bit in the red today. That is the shape of the market. Things are quite all right. But let's kickstart the show by talking about some of these stocks which are seeing big swings. So Infosys is one of the top losers. This after a global customer terminated a big $1.5 billion contract with the company. So Rima is here with more on this. Rima.
Thanks so much for that. So in September, Infosys had announced that it entered into an MOU with a global customer for a contract which is valued at $1.5 billion over 10 years. This was an MOU and it was subject to the two parties signing a master services agreement. But over the weekend, Infosys has announced that this MOU stands terminated and the two parties will not enter into a master services agreement. So this does not have any impact on the EPS or even the order book. The company declares their order book every quarter, and even in the September quarter, the order value which the company had declared does not include this MOU because it's an MOU. It wasn't that the final deal was signed between the two parties and they'd sign on the dotted line. But the street is quite disappointed because when a company like Infosys announces an MOU, the understanding is that it's going to be eventually turned into an actual deal. The fact that it's not has disappointed the street. And add to that other concerns that the company has, challenges that the company has faced in the last 12 months. One is senior level exits. Recently, the CFO of the company announced his decision to step down, Mr. Nilanjan Roy. But in the last 12-15 months, we've had two senior presidents of the company step down, Mr. Ravi Kumar and the CEO who's now going to move on to Tech Mahindra, Mohit Joshi. These two presidents have stepped down. Because of all these things, this cocktail of bad news that's coming together and the adverse environment for discretionary spending, Infosys has also had to cut down its full year guidance guidance for the second consecutive quarter. When they began the year, they had guided for a 4 to 7% top-line growth, and now they're looking at a 1 to 2.5% top-line growth. And this has been one of the reasons that Infy as a stock has been an underperformer, just up 2% year to date, while the Nifty IT index has seen a gain of more than about 20%. And this latest news about this MOU getting cancelled has also added to the nervousness surrounding Infy. Back to you.
Okay, Reema, thanks a lot for taking us through all of those details. It is still around 1.5% in the red, but I do want to point out that from the opening levels on Infosys, we have recovered around 1% as well. So that is, on this story. But moving on now, shares of TV18 and Network 18 are also moving, and they're doing quite well on the back of reports that Reliance and Disney plan to merge their India media operations. So Mangalam, tell us more about this. What do we know so far?
Well, after a mega media consolidation that was announced in the earlier part of last week, there is a mega media merger which is likely. And if reports are to be believed, Reliance and Disney is, are the companies where a deal is indeed in the works. Reliance and Disney have entered a non-binding agreement for the merger of the Indian ops of Disney, which is Disney plus Hotstar as well. And Reliance, as per those reports, will hold 51% of this merged entity, whereas Disney will hold about 49 odd percent. And this deal is to be done via a combination of both shares and cash. This would, of course, indeed create a big media behemoth, more importantly in the digital world as well, where we've seen a lot of users cling to Jio cinemas as against Disney plus Hotstar, given the sort of content boutique that was there out as well. The reports do suggest that this deal is likely to be completed by Feb 2024. Now, while this deal is likely to be between Reliance as well as Disney, the question is, which of the listed entities of Reliance does this fall under? If it had to be any media, then one would guess it would be TV18 and Network 18 itself, and that's the reason why these shares are being bid up. Of course, with all the usual disclaimers that, these are companies that own the channel that you're currently watching.
All right, big move on these stocks on the back of this news. Mangalam, thanks a lot for that. But with that, we're going to get into a short break. On the other side, Ola Electric has filed for a big 5,500 crore rupee IPO in what will be the first public offer by an electric vehicle maker in India. So all of the details coming up for you on the other side.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Business Lunch. An important story now. Ola Electric has filed its DRHP targeting an IPO early next year. This is the first public offering by an auto company in the last 20 years and the first pure-play EV company eyeing a listing on the Indian bourses. So the company is looking to raise around 5,500 crore rupees via a fresh issue. Parikshit is here to take us through more details on what we have from the DRHP. Parikshit.
Well, the total offer for sale is of 9.52 crore shares, out of which the promoter, Bhavish Agrawal, is selling 4.7 crore shares via this OFS. What we're learning is that out of 5,500 crores, 1,264 crores will be used for the Gigafactory, 800 crores will be used for debt repayment, 1,600 crores for R&D, and 350 crore for organic growth initiatives as well. The total liabilities of the company as of June 2023 are 3,600 crores versus 3,217 crores as of FY23 end. The loss for quarter one of FY24 was at 267 crores. For FY23, the loss came in at 1,472 crores versus 78 crore in the FY22. The company has also pointed out in the DRHP that it may continue incurring operating losses in the near term. At the same time, they hope to sell around 3 lakh electric two-wheelers in FY24, around 9 lakh electric two-wheelers in FY25. When it comes to the path for profitability, this is what many investors are asking. Sources are telling us that the company is hoping to achieve EBITDA profitability of 6.6% by FY25. This is what sources are telling us. what is this entire capex and fundraise going to be used for? Well, the fundraise will be used for the Gigafactory, which will be used for supplying cells to Ola Electric scooters, motorcycles, and possibly cars in this future. This Gigafactory will be up and running by March. They want to expand their two-wheeler portfolio. The S1X 2 kilowatt hour, the Ola S1X 3 kilowatt hour will be launched by H1 of FY25. Motorcycle deliveries are being targeted for H1 of FY26. So this is Ola Electric's launch plan overall. The company says that there are, of course, risks associated with the electric vehicle business, including suspension of FAME subsidies, which may impact the business altogether. But the path to profitability and how Ola will cut losses, its future product launch plans, these are something that the markets and investors will be watching out very closely.
Oh, absolutely. And this is a very, very, highly weighted for IPO. So it's going to be interesting to see how this one plays out. Pariksha, thanks a lot for that. But moving on now, market regulator SEBI has released a consultation paper on the introduction of shorter settlement cycles. So Yash is here with more details on this. Yash, this is something that SEBI has spoken about before, but take us through some of the key proposals.
Well, that's correct, Pavitra. The intention is very clear from market regulator SEBI, and that is to put in place a faster settlement cycle, which will be in interest of all investors. As far as the consultation paper is concerned, SEBI talks about implementation of two things. One is T+0 settlement and instant settlement cycle. Now, both these proposals, whenever they get implemented, SEBI said that they will be an optional, measure to the current T+1 cycle. What's the T+1 cycle? If anybody buys shares on Monday, then those shares get credited into the account on Tuesday. If shares are sold on Monday, then the money gets credited to the account on Tuesday, which is T+1 or trade +1. Now, what SEBI suggested is the first thing is T+0 cycle, which means if shares are bought on Monday, the settlement, which means the shares get credited on the same day itself, and shares are sold vice versa, the money gets credited on the same day itself. Here for the implementation, it will happen in the phase 1 of implementation, where an optional T+0 settlement cycle comes into place. The trades for T+0 settlement cycle, as per the consultation paper, will be taken till 1:30 p.m. From 1:30 p.m. to 4:30 p.m. the settlement would happen, which means on the same day the shares get credited or the money gets credited. Once this has been implemented, then comes phase 2, which is instant settlement or real-time settlement. That goes on till market closing, that is 3:30 p.m. And of course, instantly as you buy shares, they get credited, or if you sell shares, money gets credited. Once the second phase, that is instant settlement, has been implemented, the first phase, which is T+0, gets eliminated out of the cycle, and what remains is instant settlement along with that optional T+1 settlement. SEBI has also spoken about which companies and in what order these companies would come under the purview of instant settlement or T+0 settlement. So according to SEBI's consultation paper, it would be the top 500 companies as per market capitalization. First, the top 200, then the next 200, and next 100. All market participants are required to submit their feedback as far as this consultation paper is concerned by January 12th with SEBI.
Okay, Yash, thanks a lot for getting us all of the details on SEBI's newest consultation paper on the T+0 and the instantaneous settlement cycle. But moving on now, actually, we are going to take a short break on that note. But on the other side, there are a whole host of important national and international updates that we're tracking for you. So stay with us. We'll be right back.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Hey guys, welcome back. You're still tuned into Business Lunch. Some important updates now. Dense fog in and around New Delhi has hampered operations from the Indira Gandhi International Airport, resulting in multiple cancellations and delays as well. So Danish is here with all of the details. Danish, take us through how much of an impact this has had.
Well, due to dense fog and poor visibility, flight operations at the Delhi International Airport were impacted. Till 12:30 p.m., there were over 230 flights that were impacted by this. Domestic operations were the worst hit as over 100 domestic departures and 90 domestic arrivals were delayed. Similarly, 20 international departures and 20 international arrivals were also delayed. According to airport officials, 12 flights were diverted from Delhi Airport, 11 flights were diverted to Jaipur, and 1 flight was diverted to Lucknow between 6 a.m. and 12 p.m. Around 8 a.m., the visibility at the Delhi Airport dropped to 50 meters, and as per IMD, it improved around 10 a.m. However, due to a huge backlog of departures, this led to a severe ATC congestion, and the airport also initiated a low visibility procedure at 2 a.m. and around 8 a.m. the airport also issued a passenger advisory and informed the passengers that while flight operations continued, the flights that are not Cat 3 compliant, they could get affected. So all in all, if we see for tomorrow, the IMD has also said that the same situation will prevail in Delhi NCR, and in the morning, dense to very dense fog could be present in certain areas around the national capital.
Okay, Danish, thanks a lot for taking us through all of those details. We'll, of course, keep bringing you more on this through the day as well. But with that, let's also move on and talk about the surge in COVID cases. India has crossed the 4,000 mark for active cases of the new variant, that is the JN1. Around 630 new infections were detected in just a single day, taking the active caseload count higher. So the active cases in Maharashtra have also gone up. It's currently at around 163, while Karnataka went and has added around 34 cases. This is as of yesterday, all of these numbers. Now, while the World Health Organization has classified the new variant as a variant of interest, health officials in India say that no additional vaccinations are required as present. But that is an update on where the COVID latest from the Red Sea. But with that, we're pretty much out of time on this edition of Business Lunch. I just want to take a quick look at the markets right now. We're holding up with a 90-point gain. So it's been quite steady for the market after the slightly muted opening that we got. The mid-caps are where all of the action is today. So the small caps are a little bit muted. But for the mid-caps, it's a good 300-point kind of gain. And that is the reason the advance decline is so positive. I want to point out some of the larger names which are doing well. In addition to Reliance and HDFC, you have a lot of the auto names. So names like Hero doing very well, M&M, Bajaj Auto really keeping it together for the markets. You, of course, have, some of the pharma names as well. So Divi's is actually topping the charts today. It's up over 3%. And if you take a look at that, it's after a few days of it being muted in trade that you're seeing a good move on some of these pharma names as well. On the downside, I already mentioned that it is a lot of the tech companies, so names like Infosys, but also TCS, HCL seeing some cuts today. Some of the banks have seen a bit of a slip in the last few minutes. So ICICI Bank now in the red. You have SBI, which briefly had moved into the red. If we can get that up for you. It has recovered and is trading pretty much flat right now. But you did see a little bit of a pullback coming through on SBI as well. In addition to that, some of the insurance companies have not really been having too much of a good swing right now. But right now, you are once again seeing names like SBI Life, HDFC Life trading with some cuts right now. Some more international developments as well that we want to bring you. We were just talking about all of the attacks in the Red Sea. And as attacks by Yemen's Houthi rebels continued in the Red Sea, the risk of a spike in freight rates lingers on as global shipping companies reroute their vessels. We were just talking about this as well. So my colleague Parikshit is joining us now with the latest on this. And Parikshit, what has India's reaction really been to the growing security situation in the Red Sea? Take us through that.
Well, we are watching this very, very closely. There are conversations going on with Iran. As we speak, External Affairs Minister Jaishankar is in Russia. And this would, of course, be a topic for discussion as well, because we want a consensus on calming things down in the Red Sea, in the Middle East, as far as the Israel-Hamas war goes. Now, how are we responding immediately? Well, the Indian Navy has deployed guided missile destroyers, INS Mormugao, INS Kochi and INS Kolkata in various areas of the Red Sea, of the Arabian Sea, as a deterrent measure. The Indian Navy also carried out a preliminary assessment of the attack on MV Chem Pluto, a Liberian flag oil tanker which was carrying 21 Indian crew. Now, this came under a drone attack very recently, and analysis of this attack shows that it was indeed a drone attack, and now a forensic analysis is being carried out to understand the vector of this attack as well. So the Indian government, the Indian Navy deploying its assets for security of merchant vehicles, security of Indian crew, and there is a diplomatic efforts to resolve the situation in the Red Sea as well. Because there is a big concern. Suez Canal accounts for 30% of all container shipping traffic, very crucial for oil shipments. Exporters of Indian basmati rice are concerned about the Middle East conflict after 2 cargo vessels recently were hit by drones. Exporters, freight rates and insurance premiums, we are reading, could go up anywhere between 20 to 25%. So this is something that Indian authorities are watching very, very closely. One of the positive lines coming in, Maersk, the second largest container shipping company, is set to resume shipping operations in the Red Sea. And this is under security from the Maritime Task Force that has been set up by US and allies, which is called the Operation Prosperity Guardian. So other container shipping companies will also be looking at this move. But of course, a heightened response in terms of security arrangements is needed for the months to come.
Oh, absolutely. Pariksha, thanks a lot for bringing us all of the details on this very important story. But with that, we're completely out of time on this edition of Business Lunch. Thank you all for tuning in. We have Midcap Radar app included.
CNBC-TV18, embarking on a quarter century of excellence.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.